Hello everyone. Welcome back to Scar Trader, where every chart tells a story and every move is backed by experience. If you are into real-time crypto breakdowns with raw market psychology and no fluff, make sure to hit that subscribe button. Now let's dive into what Bitcoin's telling us right now, because something important just happened and it could be the clue to where we go next. So yesterday we got a dip in Bitcoin, but not just any dip. What stood out was the volume, and the selling was met with serious buying, creating a high volume candle. Right about here, as you can see, there's a huge volume candle. Now, that matters in technical analysis. Volume is like the market's heartbeat. If the price drops on low volume, it's weak, almost like the move doesn't have conviction. But when you see a dip on high volume, it's often the market telling you buyers are here, someone stepped in with size. So what does that mean for us? It means the market may be gearing up for another push upwards. That dip wasn't a flush out, it was a potential setup for a bounce. And that changes how we look at the next moves. Now here's the catch. Today's price action doesn't look bullish. There is no strong upward movement momentum, no obvious breakouts. But let me be clear, that doesn't cancel the bullish case. The high volume dip still supports the idea that BTC wants to go back towards the 116 to 116.6k range. Why that range? Because it's where we have seen rejection before. A zone that still holds liquidity, uncollected orders, and market memory. So, yes, even though today's candles look slow and indecisive, the context still lean bullish, and in trading, context always beats emotions. Alright, let's get tactical now. There are two short-term targets. Let me switch it to 1 hour chart right here. These are the two short-term levels I want you to keep on your radar. Number one is 113.3k area. That's around here. And the other one is 114.5k area. That's about this. Here's what I'm expecting. We'll probably dip first, likely to that 113.3k zone that could act as a support, retest, and a trap for late shots. From there, a bounce up to 114.5k makes more sense, maybe even more if momentum builds. These levels aren't random, they are zones where price has previously reacted, where order blocks sit, and where traders still have open business. This kind of setup, a quick dip followed by a bounce, happens often when a market is gathering strength. It's not guaranteed, of course, but it fits the current if it fits the current structure and volume context. Now let's talk about the risk because that's just as important. If BTC breaks below the low of the high volume candle here, that changes the story. Why? Because that candle represents demand. If price falls through it, it tells us that demand failed and we are likely headed lower. How low? Possibly to around 110k area where the market might hunt for even stronger buying interest. That would be a clear bearish trigger, and if it happens, expect a fast move as stop losses get hit and liquidity gets taken. So here's the rule. If that high volume candle holds, bulls still have a shot. If it breaks, step aside and let the market settle. So to sum it up all, the high volume dip suggests the market still wants to move higher, but today's lack of momentum means we need confirmation. Key short-term zones are 113.3k and 114.5k area, and the line in the sand, the low of yesterday's high volume candle. Break that and the bears take over. So that's it for today's breakdown. Let me know in the comments. Do you think Bitcoin's next move is 116k or sub 110k? If you found value here, smash that like button, subscribe, and I'll catch you in the next one. Stay sharp, stay disciplined, and always trade safe. Thank you.